Hello and welcome. You're watching Last Take. I'm Shweta Kothari. With me is my colleague Suyash Maheshwari. A very special guest joining us on the show, Sanjeev Bhasin, Director, IIFL Securities. Sir, good afternoon. Thank you very much for taking time out. Good to have you back after a very, very long hiatus. I want to first begin by talking about all that is moving the markets in the past couple of days. There have been a lot of positive news items coming in by the way of the macroeconomic picture that is unfolding at the moment. But the big story that happened on the back of the RBI MPC meet, the financial year 2024 GDP today stands revised to 7%. Talk us through what are your big takeaways and big, sort of feelers from that MPC meeting.
Well, that was on expected lines. You are missing the woods for the trees. The real money was made in the last 6 months when the Fed rates had peaked. And even though the Fed sound hawkish, it was evident that inflation was on its way down. And the RBI did this act 6 months back in June when he stopped raising rates. And I think that delinked India's economy or monetary policy from globally. That is where you started to see a lot of feelers from the FIs. And now with this clear mandate for the Modi government in the state elections, I think that set the cat amongst the pigeons, with foreigners who have been the maximum underweight in the last 16 years had to scramble for cover and buy Indian equities. Hence, this new high is more on the back of left out feeling of missed out, and the improving macros which you pointed out to.
All right, and on the elections, sir, there's been a rally, and an unprecedented rally, Suyash, for that matter, in the past 7 days, basically on the back of the 5 state elections that have come positive, ensuring that there will be a continuity in policy for the upcoming general elections as well. Set the ball rolling at this point. Mr. Bhasin?
Well, the ball rolling means that, there was a lot of pessimism on what the election outcome. This is anyway, precursor. The real elections will happen in May. And by that time, there will be 2 rate cuts, at least in the US, which was telling you that globally equities are in a very sweet spot headed into 2024. And in the emerging market basket, India was outperforming on the back of improving macros and the real wall of money, which is the retail investor and the SIP. So I am of the view, I was bullish last time when I came on your show also a couple of months back. And I still think there is room on the upside, given that the FIs have been underowned. And now with the, one hurdle over of state elections, it sets the ball rolling that what will happen in May of 2024. If there is continuity, then everyone is gung-ho. And even if there is some, minor weakness, markets will look into that in the next 6 months. But right now, you are all in a sweet spot with equities being outperforming. And as yields fall, more money will flow into equity from ETFs.
Now, Mr. Bhasin, the markets have rallied tremendously since the start of November. For someone who's looking from outside in, it may seem like Indian equities is some sort of a Soni ki chidiya. So for them, for new investors, how do they enter, how do they make fresh positions at all-time high levels?
Well, the timing or all-time highs is just a name. If you are looking, it depends on your horizon. Whether if it's very short term, then stay away. If you have a longer term horizon and your goal is to create wealth over a period of time, then get into some good mutual funds and create a portfolio. You are aware that the index was doing nothing much in the last 6 months. It was actually the mid caps which have been the stellar performer. And now we feel that the index has a lot of valuation comfort, given that earnings and, like you pointed out, the growth in GDP all bode well. At 21,000, now we are relatively not that expensive as we would have been if we had, done this 1 year back. So I think large caps are still giving you comfort. Doing a SIP in a good mutual fund will make you wealth.
Now, sir, the last time you were here back in September, you said that, you have not seen a run like this in broader markets for a very, very long time. We have not slowed down since then. So are we approaching bubble-like territories?
Well, who's to call a bubble till it bursts? And there is no bursting here. It is just that the valuations have got stretched, particularly on power, railways, defense. And there you could take some money off the chips. So we still think that the large cap stocks, the banks, the Reliances of the world, the FMCG and the IT basket. So sum of parts, Nifty is looking very attractive, and there you have enough comfort. And, like I said, if you took some money off the table on mid caps, no harm done.
All right. And so since we are heading into an election year, and as you rightly pointed out, we have set the ball rolling, there is expectation of a continuity in policy. What should be an election strategy for an investor? Where should one put their money at this point?
Well, that's a very million-dollar question. Gold is hitting all-time highs, so are stocks. So where do you put your money? Gold is an emotional asset. What comes in never goes out. Hence the wealth. But equities for the next 6 months still have a good story. And the rest we will see when the election comes. It's difficult to give a forecast or, an analysis right now. The macro picture is looking extremely good. So I continue to think large cap stocks are giving enough positivity of making money in the next 6 months in some of the large cap or the index itself, both the Nifty and the Bank Nifty.
Now, so as you rightly pointed out, the markets, the financial markets are looking in some sort of a hunky-dory position right now, and gold is at all-time high, the markets are at all-time high. But what's not rallying is rupee. We are at all-time lows over there. What gives?
So that is more to do with the dollar strength, which I think is irrational. In fact, if I could put my neck out, I would expect in the next 5 years the dollar and pound to trade much lower. But since this is an inevitable, phenomena that the dollar rises despite the bond yields softening, despite inflation, I think it's a matter of time. The rupee has been a standout if you saw a basket of currencies. And I still think the weak rupee is more to do with foreign withdrawal, which has been there on the foreign investment front. But locally, I think it's a very, very strong currency globally. And thirdly, what happens is the weakness mildly in the rupee is good for the RBI because it improves our exports, both in pharma, IT and the overall picture. So I think it's a relatively sanguine picture. Over a period of time, I think the rupee will also do well.
And now, sir, since the thumping victory of BJP in 3 of the 5 states that went for election earlier this year, PSU stocks are back in focus. BSE PSU index is rallied by about 4% in a matter of 5 sessions. Valuations wise, are we in overstretched zones given the kind of returns we have seen throughout the year from these stocks?
Well, don't look at the 4%, look at the 400% return they've given in the last 3 years. The CPSE ETF in 2019-20 was 15 or 18. It has hit 65. So you can imagine there has been a 400% run up in PSUs purely on the back that there was always valuation comfort there. It was just the realization of value which has now come to the fore. So power, defense, PSU banks are all leading this rally, and that is what has left the mutual fund underperformance actually, because most mutual funds avoided PSUs. So I think that PSUs have been a very, very strong sector, and I continue to think they will be upside, but not at the pace that they have done. So if you have been in PSUs, you are raking home the money, and no harm taking some profit here.
So, but the government has come out with certain offer for sale for some of these PSUs like Ercon and SJVN in the past, and they have corrected sharply because government is willing to sell these stocks at a discount. Given that the tremendous rally, as you pointed out, in the last 2-3 years, the PSU stocks have given, is it time for us to reallocate some of the money out of it?
Well, it depends on your it depends on your risk profile, your outlook. If it's a medium term, it's a short term or a longer term outlook. So consult your broker, consult your relationship manager or your mutual fund, and they will allocate the money. It is always better to go through a professional for the simple reason that allocation of resources is a very, very thought out process with meeting the investor and individually seeing his profile. And I still think that there is room in select PSUs which can do very, very well, but select which have gone above the board, that there you can take some money off. And like I said, you can get into some of the large cap stocks.
All right. I want to also talk about IT sector, sir. IT sector, as many have called a washout, or at least this year has been called a washout for the IT sector. IT story that is playing in is very interesting, very contradictory reports coming in as to what's going to happen over the course of next 1 year when it comes to IT. Some are now suggesting that as opposed to the 4 to 5% growth or revenue that was anticipated could come to about 6%. Were we very quick, or were analysts perhaps very quick to write off IT sector? What's your outlook on IT?
Well, it depends which analyst you follow. If you followed the FIs, then you've always lost money because they have never been correct on IT. So I'm sorry to say that, but IT indices or just 7 stocks in the US which are in the Nasdaq have driven the Nasdaq 78%. Just 7 stocks. So it's telling you that don't write off just because you have an analytical mind. Look at LTTS, look at Persistent, look at HCL Tech. They're hitting new highs. So I see no issues over here. Yes, the provincial people will always talk about IT having headwinds because of a soft landing in the US and so on. But for whatever sake, the Nasdaq is just 300 points away from an all-time high, and it is raring to go. Given that today Amazon has hit a new high. Today you've seen Apple reach again for $3.5 trillion. And in the Indian context, it all bodes well that the rupee weakness becomes a tailwind for them, and the future business, whether it's AI or cloud computing, all are going to have money on the table over the next 1 year as budgets come back in the US economy.
But now, sir, wouldn't you say that the run-up that we are seeing is mostly sentimental, given that, the IT companies are so exposed to European and US markets, which are, at least from what we are hearing, facing recessionary headwinds?
Well, like I said, you have to go by the numbers or the price. Bhav Bhagwan che. Bhav dekho na aap, where is the price? Persistent from 3,500 is 6,600. HCL Tech from below 1,000 is 1,400, closer to 1,380. Infosys has hit a 3-month high. TCS is leading the charge with a buyback. So, it's like I said, consult a professional advisor if you seek advice on a portfolio, because the headlines will never let you make money. And if you follow economists or foreign FIs, you will always be a loser.
Okay, then what is your outlook on IT, sir?
Well, status quo, the IT and pharma are very good parallels to have if you want to play the weak rupee. And we think that select IT stocks, particularly the likes of HCL Tech, Tech Mahindra, Persistent, Coforge, all these fit the basket for giving you a 25% return in the next 1 year.
Now, sir, we are essentially at 70,000 on Nifty. When can we expect to hit the big 1 lakh mark?
Let me just add to that. Last time you were here, you predicted Nifty at 20,000. That happened within a week's time. And you were bang on with your prediction. So we want you to repeat that prediction one more time here. When is Sensex hitting that magic number?
No prediction. Now you are having the best time you've had. You've had an early Christmas, 70,000. Nobody imagined a couple of months back. So always remember, the only mantra in India is always be bullish and stay invested. Just because you stayed invested because of your mother, grandmother and wife, you hold gold at 63,000. It is not because of your intelligence. And secondly, you own stock because you are bullish on India. And if you own equity, that's the best asset class where small amounts of money can become huge wealth creators over a period of time. 70,000 will become 1 lakh and more over a period of time. But that's because India's economic recovery and economic demographic premium are playing out brilliantly. So no predictions right now. Right now, enjoy the party as it plays out.
Now, sir, we lost a legend in the world of investing earlier this year, Mr. Charlie Munger. Now, Berkshire Hathaway and Mr. Munger were often criticized for holding large cash positions at a time of volatility. Now, in a market like this, which is riding that wave of momentum and riding on leverage, is that a virtue that's lost on us, holding cash positions?
Well, if you heard Charlie Munger, his 3 virtues were stay away from the 3 L's, ladies, liquor and leverage. And he was very much against leverage. So for the right reasons, leverage has always led to disaster if it's not played correctly. But if you can stay on the course and hold cash, that is a very, very big achievement. Because sitting on cash in an investable market when times are uncertain is a very big boon. And that's what these people perfected. That's why they lasted 99 years and became the richest investors. So remember, stay away from the 3 L's, liquor, ladies and leverage.
I'm not sure if a lot of ladies are going to like hearing that, Mr. Bhasin. But before I let you go, one group of stocks that has been in the news throughout the year is the Adani group of stocks. Lost large amount of market cap, have regained some of that market cap. What is your assessment of the Adani group of stocks? Should one be invested in them? Should one make fresh bets in Adani group of stocks?
So again, like I said, it all depends on your investment horizon. You cannot but be in the biggest infrastructure play in India, which has to be leveraged because of, a certain amount of debt which needed to propel these into monopolies. But if you are looking at ports, if you are looking at coal, if you are looking at green energy, then Adani bit the bullet many years in advance and had the vision to go there. So I still think these stocks are going to be much, much more wealth creators. And the only person who's laughing his way is Rajiv Jain of GQ Capital, who put in that money when when there was fear across the board. So that January, February investment must be up over 70%, and he's the one who's laughing his way to the bank. So whenever these type of occurrences come because of rumor murmuring or a Hindenburg report, use your underlying acumen to see where value lies and where there is deceit. I thought that there was a lot of value in these companies on the back that yes, they were leveraged because of the extent of the business they do, but the underlying assets which they had are superb. So I still think there is room on the upside. But again, consult your broker and see your risk horizon and what your outlook is in the medium to longer term.
Sir, given the kind of tremendous return that we have seen, does that reinstate, faith in India's corporate sector?
Look who's talking about India's corporate sector. It was the George Soros and the world who came to downgrade India in March, and they said Indian banking sector is in doldrums. Whereas it was three banks, Silicon Valley, First National and Credit Suisse, the biggest, laundry firms, which went down under. There has been nothing on Indian banks. So I think this is all bonhomie and, foreign financial investment talk on journalists. It is all to be rubbished. India is in a very, very sweet spot. In fact, our banking regulations are the best. And I would say Shaktikanta Das must be the best central bank in the world.
Okay, and before I let you go, one word of wisdom to all our viewers. We are entering into a new year. It's going to be a new financial year later in the year, but a new year with lots of hopes and perhaps sentiments around continuity and positivity and continuity in policy are also weighing high on investors' mind. One word of wisdom. Or one line.
Word of wisdom is, depending on your age profile, consult an advisor and allocate 4 asset classes: real estate, gold and silver, which is emotional, fixed assets as in real estate, gold and silver, fixed income and equity. Equity being the cheapest or the least amount of investment which can go into will always be the preferred choice, but it will be volatile. So consult your professional advisor, your RM or a broking firm or IIFL Securities, and we will get you through to how to park your money in all these 4, investment opportunities or asset classes. Because in the Indian context, we think equities and real estate have miles to go over the period next 10-20 years.
All right, Mr. Bhasin, thank you very much, sir. Always a pleasure listening to you here on Newsline. Hope to get you back very, very soon. Thank you.
Thank you.
And before we end today's show, the bull's run has continued for about 8 sessions now, 8 to 9 sessions now. Some of those gains, and the markets had to let go of some of those gains yesterday, but the green shoots are back.
The green shoots are back, and it's a historic day for us. We have finally
conquered
that mark, the milestone of 21,000. And Nifty also came in within a touching distance of 70,000. At day's high, we were at 69,893. So just 17 points shy of it. So we are essentially there. It's just a matter of time when 70,000 is finally achieved. Now the broader market, Shweta, those, and we have been talking about here on Newsline also, those are showing some signs of exhaustion at higher levels, where time and again we are seeing big intra dips there, and we finally saw a day of profit booking. Nifty Mid Cap 100 has snapped its 23-day winning streak to end lower in today's trade, and the bigger loser of all the 3 indices was a small cap index, which dropped by as much as 1%. But then again, both indices had also scaled a lifetime high in today's session, and unless we see a big a major drop from here on, I think the party still continues, and we are expecting bouts of volatility to pick up since the market are in uncharted territory.
But some correction there in the broader
Some
markets.
correction is expected. And you know, Nifty is on a 6-week gaining streak, and we have not seen this kind of a hot streak since December of 2020. And what's more important and more impressive is the fact that this pace of increases is only just picking up week on week. You know, this week we ended about 3.5% higher on Nifty, and this is the best weekly gain of 2023. And even the heavyweights are participating, Shweta. And we have been talking about how, you know, this rally has not really extended to the big heavyweight drivers for the market, and they are finally participating in that rally. And today's big performer was, of course, the banking index, which, you know, after a couple of days of consolidation has finally rescaled, clawed back on all those losses and hit a new record high of 47,300 mark. Now, we all know that on a year-to-date basis, Bank Nifty is still a relative underperformer. So, if it is to catch up to Nifty by the end of year, we could perhaps see 50,000 levels also on Nifty Bank. And you know, IT stocks, what a tremendous run they are staging in the last 1 week or so. In the last 1 week, they are up by about 4%, the Nifty IT index. In the last 1 month, the IT index is up almost 9% or so, and this is on the back of expectations that the US Federal Reserve will not go for another rate hike, and in fact go for aggressive rate cuts starting next year. So we are seeing a good sentimental buying interest pick up in IT
tailwind
stocks.
In IT,
Definitely,
perhaps.
and those were the laggards, and those were the stocks that were not participating in this rally, in banking and the IT, and both are now picking up pace. Auto stocks corrected. Now auto stocks, the worst hit in that pack were the commercial vehicles and the two-wheeler segment, which apart from, you know, facing high interest rate environment, is also suffering a lack of rural demand. So a double whammy over there, and we saw a big intraday correction in some of these commercial vehicle stocks as well as two-wheeler stocks like your Bajaj Auto, Eicher Motors, Ashok Leyland.
These are also rate sensitive stocks on back of steady rate at 6.5%, RBI hitting the pause button. Perhaps there was a correction anticipated in these stocks.
Another sector which is also rate sensitive is Nifty Realty, but that's not showing any signs of a slowdown.
Unabated.
We are at a multi-decade high. We are pretty much talking about, you know, how at what point will the rally in Nifty Realty finally come to an end, because this has been the best performing sector of 2023. It's up over 60% year to date, and on pretty much on a daily basis we are forming a new multi-decade high. Now Nifty, you know, there was at least the market was expecting some bit of a profit booking to take place, given that we are going for a higher interest rate regime for longer, but that was not the case, and in fact we have scaled a new record high on Nifty Realty as well. Pharma stocks, now they have been an underperformer, Shweta, in the last 1 week when the entire market is rallying. That's the pocket which is seeing some bit of a correction. For the week, it's down by about 3%, down by about 1% or so, and most of that those losses have come in fact today. And but do not forget that Nifty Pharma is also at a all-time high level. We are just about 1% or 2% shy from that. So perhaps some bit of a profit booking is happening on Nifty Pharma. But apart from that, it was a green day, a big historic day for Indian markets. Big historic
day for Indian markets, perhaps one of the best week for Indian equities in the year 2023. So as we close the year, more and more good news coming in from the markets. We continue to track all those details here on News 9. But with that, it's a wrap. We'll be back after a very short break.